Good evening, all. Welcome to the webinar on economic substance regulations. And first of all, I thank everyone to take time and take participation in this webinar. In this webinar, we want to essentially highlight the changes that has been brought by the regulations amendment, which has happened in August 2020. This regulation amendment has taken a few key changes which we want to discuss, and also for the greater public, we will be also sharing key aspects of ESR which will enable them to understand the topic on ESR. This ESR webinar we are presenting with the help of Mr. Jaykrishnan, partner for tax, and also I'll be also sharing some of my knowledge or some of the thoughts which I want to share on ESR. As a scope for this webinar, we are focusing mainly on giving a brief introduction on ESR. We'll look into what are the major amendments that has brought in by the Ministry of Finance, what are the implications, and of course, we will be taking on the Q&A. And on the Q&A, because there are larger public being addressed through this webinar, we have restricted the questions to be answered, or questions to be asked, the questions to be asked through, if you can see, there is a Q&A tab, you can type your questions. And by the end of this webinar, we will be answering all those questions. So give a brief on ESR. This, as you know, like there is an authority, or there is an organization which is called as Organization for Economic Cooperation and Development, which takes into account various global economic development and global economic cooperation between the countries. And one of the primary objective of this organization is to avoid any kind of tax malpractice. It is mainly referred as BEPS, is base erosion profit shifting. I would like to explain this with an example where a company is trying to shift profit from high tax regime to a low tax regime. Say, for example, let us take a US company who wants to sell goods to Saudi Arabia, and because US is a tax country, it has got income tax to be accounted for. So what the US company does is they register a company in UAE where there is very less tax, and based on that, what happens is US company will invoice to UAE company, and UAE company will in turn invoice to Saudi company, where what will essentially happen is US company will be able to shift the profit to UAE, and this leads to tax evasion at US, and there is a loss by the country which is having substance of the operation. So UAE was blacklisted last 2018, and to come out, they have to sign 5 action points of BEPS, and ESR being one of it. So what is this ESR? This ESR regulations requires every licensee, like, to prove the income that is recorded in UAE has an substance, or the income is derived from the operations in UAE. Now, this regulation is effective from January 2019. And any financial year which begins on or after January 2019 will require to comply with the CSR regulation, demonstrate the economic substance, and show to the authority that whatever income is booked in UAE is because of the operations in UAE. If otherwise, there are consequences, which we will be explaining, or which we will be briefing at the end of this or later on this webinar. Now, if you look into this profit shifting, so this organization has identified 9 activities in which the profit shifting can happen. Only those 9 activities are required to show the substances. We will be taking into details what are the activities, especially giving importance on what are the implications of the amendment that has happened, how the scope has changed because of the amendment. And this regulation requires first to notify whether I am applicable or not, and then to prove the substance, you have to do a year-end reporting. So moving on, I just want to give a brief or a high-level snapshot of what are the 9 activities. If you see here, the activities are banking, insurance, investment fund management, lease finance business, headquarters business, shipping business, holding company business, intellectual property, IP, or distribution or service center. If you look into the character of these activities, it is essentially where a profit can be shifted. You won't be seeing a manufacturing coming under this list because manufacturing cannot shift profit. If you are booking revenue of manufacturing, essentially the manufacturing activity would have been happening here. So, or otherwise, you take a construction, a real estate company who is a developer of a real estate. Basically, this profit cannot be shifted. So now I will request Mr. Jayakrishnan to take us through with the major amendments of August 2020 on ESR.
Thanks, Harish, for the quick and crispy presentation on the initial part. As Harish mentioned initially, this session is meant for a discussion on only the major amendments which recently UAE authority has been published. This session is not for the whole discussion on the ESR, which has been already discussed. And the latest amendment, comes on these 8 or 9, main headings, and the other headings which remain unchanged. And there is no changes on the other part of the regulations. We have seen what is economic substance regulations in May, June of 2020, and we were going through the notification process in June, and mostly we are all aware what is this law. Today the session is meant for giving you some inputs on what are the major amendments happen in the law. That is a purpose. So going into the major amendments, this is what we have listed here. So the first amendment has gone to the previous. Basically what they have done is they have revoked the previous regulations on ESR, which was published in 2019. Even 2019 they have issued 1, 2, 3 times. 3 times they have amended, and then they have given some additional appendix on that. So all those 2019 regulations has been revoked by issuing a new guidance and clarifications in 2020 recently. I mean in the month of August, which we will come to that slides. Again, the new definition for licensees and exempted licensees has been published. Amendment in definition of connected person, group, and relevant income. This is more important because this was not published in the earlier sessions. And treatment on branches, both local branches and branch of foreign entities. And there is a new national assessing authority, which has been introduced in the new regulations. And Federal Tax Authority is the new national assessing authority on this particular purpose. New portal for new notification has been introduced, but it's not open for the public, but they will be announcing it any time. Deadline for notification and reporting has changed, and relevant activity. There are a few modifications they made on the definitions and inclusions and exclusions on relevant activities. 9 relevant activities which we have discussed earlier. Going to the first part, first amendment. If you see that diagram on the left hand side, you can see what is the basically this diagram talks about the evolution, why these changes. If you see the new ESR is been retrospectively applicable with effect from 1st January 2019. So the earlier provisions which issued is been replaced with the new ESR notification. So the new amendment is retrospectively applicable. Important. Number 2, if you see why the new ESR regulations has come, what was the problem in the earlier regulations? See, there was no major issues, but there was some non-clarity or some areas which was grey in the regulations where the public was totally confused when at the time of notification, whether I have to do or not, or this is applicable to me or not. So this made confusion to the public, and basically what did OECD and European Union has notified it to the UAE authority that you have to simplify it a little bit, or you have to revise it in a way that some of the new activities has been added, some are deleted. So the main reason for the amendment is to the pressure from OECD and European Union. And going forward, they have announced that the same authority, OECD and European Union authority, will do a peer review consistently year by year in the coming years. That is also a good decision from the global authority. So if you look the second changes or about this, see, this is again an explanation or an extension of the evolution. All the regulations 1, 2, 3, 4 been issued in 2019, and then the right hand side you can see the regulations issued in 2020 August, 10th August, 19th August, 1st September 2020. All these are, if you see that this is already available in the portal of Ministry of Finance. Cabinet Ministerial Resolution 57 of 2020 talks about the basic law about the ESR now, which replaces the earlier resolution of 2019. And then they have amended the frequently asked question, which is also published in the website now. So that was the earlier slide. Now coming back to the definition, what is the changes made in the licensee? These are not, this was earlier explained, but problem, there was some gray areas, there was some confusion on this part. So they tried to explain in simple what is licensee. ESR is applicable only to licensees, an entity that is a juridical person, that means incorporated inside or outside the state, or an unincorporated partnership. State always meaning United Arab Emirates. Registered in the state, including the free zone and the financial free zone, and carry on the relevant activity. Very important. Please note this point. Juridical person is a separate legal personality from its owners. Hence, a natural person, a sole proprietorship, a trust, a foundation are excluded from this definition. Unincorporated partnership firms, or the partnership forms of partnership that may operate in the United Arab Emirates without having a separate legal personality, example joint venture. So what this slide talks about is, the basic eligibility should be, you should have a license. And there are few cases that even if without license, called, that is what they try to explain, unincorporated partnership. So the exclusions are a natural person, a sole proprietorship, a trust, a foundation, etc. are excluded. But again, going back to sole proprietorship, what we understand from the regulations on our high level verification from third party in the experts, that typically a sole proprietorship license which we see in United Arab Emirates will not be excluded. That will be included in the coverage of ESR. And if any individual is conducting any activity in the capacity as a sole proprietorship, will be excluded, not in the form of a license. If you have a license, which will be always counted as a separate legal entity. And these are the exempted license. The licensee, that is a tax resident outside the UAE, based on the definition always applicable based on the double taxation treaty avoidance agreement. So if this company or the licensee is a tax resident outside the UAE, it is exempt. An investment fund and its underlying SPVs or investment holding entities. Simply an investment fund company, that is the meaning. A wholly UAE resident owned business that is not part of the multinational group and that only carry on business in the United Arab Emirates. Very important. A wholly UAE resident owned business that is not part of a multinational group and that only carry on business in the United Arab Emirates would be excluded in the new regulations. A branch of foreign entity that is subject to tax on all of its relevant income in a foreign jurisdiction. Please note the point, it is subject to tax. Yeah, a branch of a foreign entity that is subject to tax in the other foreign jurisdiction would be exempt for this purpose. A licensee with 50% or more share capital by a state or a federal government or department are now not exempted. Yeah, earlier in the earlier provisions it was exempted. We were not supposed to advise a government company or any entity where the state or the federal government was holding more than 50%. But now they are also, that exclusion has taken out, so they are into the regulations now. And now, if you see, the implications of the new regulations, these are a tree, a flow chart which show that what is the implication, what is the consequence. So a licensee in the mainland or in a free zone or any offshore, if you have a license, no, then of course there is no ESR. ESR is not applicable. If you have a license, then make sure you have an exempt license or not. If you are running with an exempt license, as we discussed in the previous slides, only submit notification. You have to submit a notification. Reporting will not be applicable. Along with the notification, you should prove that the qualifying document should be produced to show that our company is exempt. If no, then we have to see. So we come to a normal licensee, yeah, a normal licensee category. Then we have to see whether they conduct the relevant activity or not. As per the ESR, are you conducting a relevant activity or not? If you conduct relevant activity, yes, submit notification, submit reporting, no doubt about it. But if there is no relevant activity conducted for the last year or for the assessment year, you are again out of the ESR, and ESR is not applicable, which means you don't need to notify even. Only notification is mandatory for the licensee who conduct either a relevant activity or an exempt license category. So those category comes either notification or both. And now going back to the definition again, because this was not clear in the earlier regulations. They have defined now what is a connected person, what is a group, what is a relevant income, because these terminologies are repeatedly appearing in all the forthcoming slides. So which is very important, especially in the angle of IFRS. I think as per our understanding, the ESR authority wanted to move slowly into the definition of IFRS for group and the connected person and the relevant income, because that is what the overall underlying structure which we can see in the definition. So if you see connected person, an entity that are part of same group as a licensee or an exempt licensee. But again, the group is defined as two or more entity related through ownership or control such that they are required to prepare consolidated financial statements for financial reporting purpose under the accounting standards applicable. Very important. Group was not defined earlier, now they defined. Any two or more entity who are supposed to consolidate the financial statements based on the accounting standards applicable. And number three, what is relevant income? Relevant income means, relevant income means gross income. Gross income, again, they define what is gross income for this purposes. All gross income from relevant activity that is recorded in the books of accounts of the licensee or the exemptee licensee under the accounting standards applicable thereto. Very important that earlier we used to say, I'm just telling an example, reimbursement of expenses, which some of the company foreign entities are showing as a deduction from the expenses, or some entities show it as a revenue in the revenue side of the P&L. So the authority clarifies now, if the local standard or the standard which you applied for preparing your financial statements mandate that it should be booked as an income, yes, this will be an income for the ESR purpose. So you will be automatically falling under the ESR if you follow that practice. But what if you don't follow that? Then you are non-compliant. So you are non-compliant for both. For the local standards also non-compliant, or for the ESR also you will be non-compliant. So make sure we advise the clients that what is relevant income, or the clients are following the relevant income as per the local or the international accounting standards, whichever the accounting standards they are applicable to. Now the branches, simple, there is no confusion on it. It's more clarified or simplified it now. Earlier, we were clear, or even before, what is a branch of treatment of for the ESR purpose on branches. Now it's simplified that UAE branch of a UAE company. Yeah, that is simple. UAE branch of a UAE company. Only single notification is required, no multiple notification. That was the earlier provision as well. There is no change on that. Foreign branch of a UAE company. Now, if it's a foreign branch of a UAE company, then if the income of such foreign branches are taxed abroad, then excluded from ESR. We don't need to comply. Make sure this foreign branch is subject to tax. The law say taxed outside UAE, but always remember subject to tax. These two terminologies are very important. UAE branch of a foreign company. Yeah, if income of UAE branch are taxed with parent, then excluded from ESR. Simple. Again, if there is a branch, UAE branch of foreign entity, and if this branch is already taxed in the other country or in the parent country, then earlier we had an impression that we were supposed to notify it or report it, but now they have clarified that no, it is not applicable. They are excluded from the ESR. Now, multiple UAE branches of a foreign company, if income of UAE branches are taxed with parent, then these are again excluded from ESR activities. So it's clear that branches are mostly coming out of the provisions, because if it is taxed outside the UAE or in their parent jurisdiction, but make sure that it's taxed. So we have to produce a proof of tax subject to tax or actually taxed in those countries, which will come to later slides when we produce or the mandatory requirement for the reporting documentations. And now Harish will go again with some changes made on relevant activity. I think Harish, we don't need to discuss the whole relevant activity. Instead, the changes made by the authority on the relevant activity needs to showcase. Harish, please go ahead. Harish, your sound is muted.
Okay, sorry, I was muted. Okay, so now the relevant activities, when it comes to relevant activity, there are 9 relevant activities, and out of that, almost 4 relevant activities has gone amended, and it has increased the scope of ESR as compared to the previous regulations. To start with, there are straightforward activities such as banking and insurance, which we can identify from the license itself. When it is issued by a central bank, it is a banking, and if it is issued by insurance authority, it's an insurance company. So not directly they are covered under that. There is no question to, or there is no doubt on what is banking and insurance. Then it comes to the investment fund management, the third activity, where you are providing a discretionary investment related advisory services. Then you are covered under this activity. Then the fourth one is lease finance business. Basically, we are talking about here is a finance lease business. If you are providing or arranging or giving credit to your customers, suppliers, or even to a group company, if you're providing that and it is for a consideration, then you're falling under lease finance business and you will be falling under the ESR category. Headquarter business. Basically a company or a licensee who takes care of operations of the group as a whole, where they incur or they coordinate the group activity and they are responsible for the outcome of the group. So those kind of licenses are classified as headquarter business. And moving on to next activity, shipping business. Shipping business is mainly where the company is into managing crew, overhauling and maintenance of ship, overseeing and tracking the ship, and determination when what good has to be ordered and when delivered. So basically, a company which manages the ship, like which facilitate the shipping activities to the customer. So first 4 categories was not amended and it is kept same. Now let us move on to the first activity which was amended, and it has implication because it has broadened the scope of ESR. So earlier, when it comes to the holding company, what the law defined was that it is as per the law applicable to the licensee carrying out the activity. So that means if it is a mainline company, then you have to see the mainline company's regulation. If it is called as holding company, so what is a holding company defined in the DED's Commercial Companies Act. So if you refer the Commercial Companies Act, Article 266 says that you are a holding company only if you are holding a majority share. Like you are directing and controlling majority, have a directing and controlling power, or you have a majority interest in the share capital. Then only you are coming under this scope. And also, your primary function has to be holding shares. So if these 2 conditions were satisfied, then only you are coming under the scope of holding company. But now what has happened is they have removed the definition. So you don't have to take the definition from any of the legislation of UAE. Now it says that where your only function is acquiring and holding an equitable interest in other companies, and you earn only dividends and capital gains, you are falling under the holding company definition, and you will require to ESR compliance. So what is the implication? Even if you're holding a 1% share in another company, and your only business is holding share, you're falling under this relevant activity, and you have to comply with the ESR. So the implication means now even if you don't have majority, even 49% shareholding will also lead into ESR compliances. Let's take distribution business. This has been a hot topic when the ESR regulation has come, previous regulation, and there was one criteria which has to be like always highlighted by the client saying that, okay, I'm not doing this, so definitely it's not applicable for us. But I'm happy to say that when HLB took an interpretation on this on it, we were correct, and that has been shown in the regulation also. So earlier, what distribution business was referred to as, where you purchase goods from a connector person, you import and store the goods in UAE, and then you resell. Then only you're becoming a distribution center business. Now here, importing is mandatory and sale outside UAE also was required. Now the new definition has totally removed the importation requirement or storing requirement. Now you just purchase a goods from a foreign connected person and you do a reselling, whether inside or outside, you are covered under distribution. So that means the drop shipment will be included, where it is also referred as high sea sale, where UAE in the goods does not come in UAE, it just goes as high sea sale. That will be covered. Like if the invoicing is done from UAE for the sale for high sea sale, it will be covered. And also if goods are imported and sold to UAE is also included. Now the scope of distribution center business has been, what do you call it, it has covered majority of the business now, because whatever where there was some doubt on exclusion, that has been cleared by the new regulation. Now let's take service center. That is also having confusion whether it should be service related to a business which is inside UAE or outside UAE. That has also been clarified now. Now it has been, the old regulation required that the service to be provided to a foreign connector person in connection to the business outside the state. Now that is removed. Now it is only if you provide service to foreign connector person, you are under the category. So now this scope is so widened for service center now that almost all the company which are multinational in nature will fall under this category. Now, be it any kind of operation being done, it's a multinational company, any kind of revenue generated for any royalty, any services, any support fee, every such licenses will come and cover under the service center. This is kind of a residual bucket where everyone will fall. Every multinational company will fall under this. Now, the most interesting and complex part was intellectual property business, because yes, by the nature of intellectual property, you don't have any substance to see and assess whether there is profit or whether there is a goods, is there a movement of service or anything. It was very difficult. Now, what they have done is that they have not brought in any change in the intellectual properties business, but what they have done a change is on high risk IPs. So just to give a brief background on intellectual property as far as ESR is concerned, if you are doing intellectual property, well and good, you just prove the substance. But if it can be categorized to high risk IP, which is high risk intellectual property, in such cases you are by default considered as a defaulting company and you will be subject to the consequences. Now they have, what I can say, they have reduced that severity. They have reduced certain aspect of high risk IP. So now there are some leeway given on high risk IP. Now, what is IP? Most of us are from finance background. We understand what is IP. It can be brand name, or it can be software. It can be a trademark. So all those, if you are generating an income out of use of exploitation of that, and there is separately identifiable revenue out of the intellectual property, then it is an intellectual property and you will be covered under a intellectual property business. Now, what changes come to this high risk IP? So earlier, if licensee does not carry, even though licensee has generated or created an IP asset, but it does not carry an branding and development or marketing kind of activity for that particular IP, then it was deemed to be high risk IP. So that means if I generate an IP asset and I use and exploit it and generate revenue, but I don't do any marketing or I don't do any branding and research and development, then in that case, I'll be kept outside and I'll be made a high risk IP. Now this has been removed. Now only you are coming under high risk IP if you do not create an intellectual property which you hold, and that intellectual property is acquired from a connected person and it has been leased out to a connected person. So that is the only definition you have to look into to see into high risk IP.
So these are basically simplified, more simplified. Yeah.
Yeah. Now I request Mr. Jaykrishnan to take further with the reporting and notification requirement.
Yeah, thanks, Harish. I'll move into the next session. Notification. See, these are mostly talking about deadlines. Deadline we were clear earlier, yeah, but still there was some gray areas on deadline dates, but it's more clarified now. Basically, what they said, financial period. This has been split into financial period, assessable period, and notification due date and reporting due date. 4 sections. If you see financial period is always 1st Jan 2092, 31st December 2019. Or it can be 1st April 2019 to 31st March 2020, or it can be any financial year starting on or after 1st January 2019. That was the understanding. So that remains same. Financial period, whatever the financial period followed by the client on or after 1st January 2019 will remain as it is. First assessable period for the first line, say if the financial period was January to December of 2019, assessable period is also same, 2019 January to December. So if you see both the columns, I mean first column, second column remains same. Notification due date, now they clarified this is 6 months after the financial period. 6 months, they have clearly written it as a 6 months. Earlier they have given date deadline of June 30. This 6 months was not defined, but now they define. So if the financial year was December 31st of 2019, notification due date should be June 30, 2020. Similarly, if it is March 31st, 2020 is the financial period ending, then of course 6 months after March 30, September 30 of 2020 would be the notification due date. So it goes on like that, 6 months after the financial period. And coming to reporting due date, that was also clear in the earlier regulations. 12 months after the financial period, that remains unchanged. So the first line, if you see the financial period, 1st Jan 2019 to 31st December 2019, the last column reportable period would be, the last date would be December 31st of 2020. And second line, 31st March 2020 was the financial period ending. Of course, it should be the last column fall into March 31st of 2021. It goes on like that. So 6 months is been added into that. 12 months for the reporting is remains same as before. And now very important slide. What are the ESR reporting contents? What are the contents which we are going to report to the government? The format of the ESR reporting is not announced yet, but they have given the indicative contents at the time of reporting. So type of relevant activities conducted, what type of activities we have conducted or the clients has conducted. Amount and type of relevant revenue earned from relevant activity. Amount and type of relevant revenue. That means a simple breakdown. Amount and type of operating expenses and the assets in respect of relevant activity. Again, further breakdown of operating expenses and the assets in respect of relevant activity. Location or place of business. Number of full-time employees with qualification and employees engaged in relevant activity. Core income generating activity for every relevant activity as per the law, because the law has already defined what are the core income generating activity, that means CIGA under each heading. And the financial statements, important, please note down financial statements. Now it is mandatory that every client should produce a copy of financial statements along with the ESR reporting, not audited. They have not introduced the term audited. So we presume that these are only unaudited financial statements, but still it makes a lot of changes when we go for reporting, because we know the offshore companies and many of the free zone company operating without an office and operating remotely, they don't normally prepare financial statements. So we have to make sure that at the time of reporting they are filing the financial statements. This is a good opportunity. We have to capitalize it and ensure that going forward all the clients should produce financial statements, in-house financial statements. And the self-declaration. What is self-declaration is not announced. The format is not announced. And relevant if the relevant activity includes intellectual property and separate declaration on high risk IP. These, if you look all these, you are giving or providing along with the reporting formats all the breakdown and further breakdown of relevant activity and core income generating activity, full-time employees, what is their qualification, and financial statements and mostly the other self-declarations. So these are very important that we have to advise our clients based on these reporting guidelines. And if you see role of authority, see basically the authority, relevant authority is there. And see, we have discussed earlier, a national assessing authority is introduced, that is Federal Tax Authority. The ministry has given the power to Federal Tax Authority as a national assessing authority. So these slides, we wanted to discuss about what are their authority, basically what they do. If you see relevant activity, relevant authority is the license issuing authority. Say, for example, if it's a mainland license, of course, it's Dubai Economic Department or any local Emirates. Economic department. See, if it's a free zone authority. If it's Jabza authority, Dabza authority, etc. So they are the relevant authority. So what they do, the relevant authority collect and review the accuracy of the notification and reports, and they report to the tax authorities, federal tax authorities. Relevant authority to report to federal tax authority in case licensee fails to submit any information required under ESR law. If you see this, the authority of the relevant, the power of relevant authority of the licensing authority would be more of, collecting the information, make sure that there is no, major mistakes or calculation mistakes or the presentation mistakes on it, and whether they followed a proper format for this or not. And in case they feel that the licensee failed to submit any information required under the ESR, it has to be separately reported to the FTA. That means the National Assessing Authority. And coming back to National Assessing Authority, they are the authority to assess if the substance test is met and impose penalties. They are the authority who will be assessing based on the reporting document which they have received through relevant authority. And then report to Ministry of Finance in case there is a violation, or in case they wanted to report to the Ministry of Finance for a high risk IP or something which they feel that this goes cross border, then of course they have to report to the Ministry of Finance. And FTA reports to the Ministry of Finance on licensee fail test, number 1, number 2, high risk IP, number 2. And we were discussing earlier about tax residents outside the UAE and subject to tax and those category. These are cross border transactions. So basically, wherever they feel that any licensee who is a tax resident outside the UAE, or these are subject to tax outside the UAE, of course, it has to be reported back to the Ministry of Finance. This will be done by a National Assessing Authority, that is the federal tax authorities. And now again the fine. Of course, when we discuss about fine, it's always the trend is increasing trend. Now the new regulations has enhanced it. If you see the first line, if the licensee failed to meet the requirement of the test in the first year, 10,000 to 50,000 was the earlier one or old one, and now it is stated by 50,000. No, 10 to 50,000, it is 50,000. Now, if it happens in the second year, consecutive year, also then 50,000 to 300,000 now become 400,000 straight away. So the first time failure 50,000, second year onwards 400,000 dirhams, they can impose the penalty. And if the information given to relevant authority or FTA is not correct or accurate, then now from 10,000 to 50,000 bracket straight away they fix it as 50,000. If notification is not submitted, earlier it was 10,000 to 50,000 bracket, now it is 20,000 straight away. Easy. Calculation is easy for FTA if notification is not submitted. And basically persistent non-compliance, license annulment, license. See, this will be impacting now. If they continue non-compliance, they have given the power to the relevant authority to cancel the license, or they may not be able to run the business. These are the penalty clauses. So if you see the in total penalties are increased. So we should be careful in advising to the client that they can go up to 400,000 dirhams. So 400,000 for the failure, for the substance test failures. And this slide talks about, like Harish was earlier mentioning, is it that the scope is widened or scope is reduced? Yes, there are areas where the scope is widened. There are some areas where the scope is reduced. Widened areas are government entity exemption removed. So all the government entities are falling into the regulations now if they conduct the relevant activity. And distribution service center scope is enhanced, and holding company scope and enhanced. And what is reduced is local business. We discussed earlier, only if it's a locally resident company, owned company, and then they're not part of a multinational enterprise, or if they don't do a foreign business, then yes, these are exempt. So which means a purely local company who is operating in UAE and it's owned by either a resident or a national will be out of the scope. Exemption for business tax resident outside UAE. Yes, any entity which is taxed or considered as a tax resident outside UAE as per the double taxation avoidance agreement, yes, that is also exempted. And branch of a UAE company need not file separate notification or return. Yes, that was already discussed. If again that falls into the taxation criteria. And now, like earlier, we still have a gray area or not? Yes, there are a few areas, still the gray areas are there. When we spoke to the authority, even authorities are also not very clear on few areas, which we expect that they will clarify through a separate notification. These are only an example, like IFRS. We all know IFRS is not mandatory in UAE. We follow either IFRS or you can follow local standard. As per the Commercial Companies Act, you can follow any the local standards if you want, or any of the standards which you wish to follow. But problem, the group or the multinational enterprise or the connected person, all the definition which talks about consolidation requirements as per the standards which you apply. Since there is no standards available locally for the consolidation, then it's a gray area that whether this entity will be counted as a group entity or not. It's a question mark, which we feel that we will be able to answer it in the coming months, because the ministry should issue a separate clarification, those kind of technical issues. And again, lease and finance business, this issue was there in the earlier regulations as well. The regulations say that it's the licensed associates, license for conducting lease and finance business. But what if a licensee, lending to a third party, but who are not licensed for lending? I mean, a local company who is lending to someone else, either a corporate or an individual, and then make revenue or make interest out of it, whether they fall into the regulations or not is still a question mark. Because normally we know in the mainland there is no separate licensing and we can still lend without license. So there was a doubt on the notification in June 2019 because there was no form even open. But let's see when the new notification form comes, how it is going to apply. We will discuss that time. But as of now, there is a confusion on these two. These are two examples which we have notified. There are a few other areas which is not that much relevant. Mostly the clarification, they have given the clarification on the gray areas. And Harish, now you can conclude by discussing about key takeaways.
Thank you very much, Mr. Jaykrishnan. So basically, as we understand, there are a certain scope which has been widened. There are certain scope which is reduced. There are still some gray areas which we expect that the authority will clarify. So if you take the key takeaway of the changes that has been brought by the amendment, number one, now they have clearly defined what is licensee. So you need to be a juridical person or an unregistered person to become a licensee. And that licensee also has to see whether you fall under exempt category or not. If exempt category, you report a notification. And as well as if you're not in an exempt category, then check if you have a relevant activity. If the relevant activity is yes, then you have to do the compliances, that is including notification and report filing. Now, treatment of branch is clarified. So what happens if there is a multiple branch of a single foreign company outside the country? So now it has been clarified, like you have to have multiple reporting, or where the branch of a foreign company is already incorporated in the tax return of parent company. Do we need to comply with the ESR? The answer is no. You just have to have the compliance only where if your branch is not subject to tax in the parent company. We can take a simple example. Say, for example, a branch of a Saudi company and a branch of a Bahrain company. Assuming that Bahrain does not have income tax. So in that case, branch of a Saudi company is automatically getting taxed in Saudi Arabia, but Bahrain branch is not taxed. So Bahrain branch has to comply. Now, connected person, group, and revenue is now clarified very in detail, or it has been clarified to an extent possible. Connected person and group is where the IFRS definition comes into picture, where if you are required to file a consolidated financial statement, yes, then you are in the group. And revenue is defined. Now, revenue says that it's a gross revenue that you derive from the income, which has to be accounted as per the accounting standard that you are following or which is applicable. So there is one thing, important thing to be noted in the group and revenue definition is that you are required to do, like you might be required to do if you follow the IFRS, do a consolidation, but you may not be doing it. So in that case, you still fall under that, or maybe you are supposed to record the revenue, but you are not doing it. So you have to see whether maybe IFRS compliance is done or not. If we are following IFRS, that has to be seen. Now, relevant activity scope, as we discussed, has been expanded, especially for distribution and service center. Yes, there are even holding companies also expanded. There are some leeway for high risk IP. Notification reporting deadline clarified. I remember very clearly, like we spent hours discussing what happens if the date of financial period is not ending on 31st December. Do we need to still file the notification of June 30th? Now it is clarified, like year end as per your year end is as per your incorporation document. What is your year end plus 6 months? That is your notification plus 12 months. That is your reporting. Now, National Assessing Authority, Federal Tax Authority has come into the picture. Now, when as we understand or as we have experience with the Federal Tax Authority, they are very good fine imposer. They will be very ruthless when they come to impose fine. They don't see left and right. They will impose fine if you have non-compliance. So now the what I can say, the biased or thing that can happen when a fine is been issued by the licensing authority has been totally removed. You can also see the penalty has been increased. The penalties, what do you call, the biasness or it's a fixed penalty. Earlier, the authority could have levied only 10,000 in all the cases, and 50,000 they will never use it. Now, but they have to use 50,000. There is no other opportunity, or they have to use 40,000. Now, because of this new amendment, change in definition, the basic definition that the licensee and change in relevant activity, all the assessee who has done the notification has to do a re-notification after reassessing it. So whatever we have done, it's as good as not done. Now we have to do a reassessment and do a re-notification to the authority based on the revised licensee and the relevant activity definition. Penalties are increased. There are some few gray areas which we hope that or which we think that it should be clarified or by the authority, Ministry of Finance or Federal Tax Authority, because now Federal Tax Authority has come into picture, more proactive federal level authority. So I think it will be more streamlined now and efficient as compared to the previous system where we were struggling to find where to do the notification for different authority. Hopefully this will not just benefit our tax department but an entire consulting firm, because now you have to have financial statement. Now it has come out that you have to submit a financial statement. Auditor or not auditor, I in my personal opinion, somewhere down the line they will come as an auditor, because the reliability of financial statement can only be ensured if it is audited. So on this, I would like to conclude on the amendment update webinar. Now I have received questions that has been posted by you. I'll take one by one and we'll discuss and respond to those questions.
Harish, how many questions we received?
I think I have received 18 questions. Some are repetition, but I will try to streamline.
Okay. Harish, one point we missed to say, because it has been specifically mentioned in the law about withholding tax. The subject to tax or the tax does not mean that if the client has a withholding tax from other country, even if the income was subject to withholding tax, then it is not counted as tax resident or subject to tax. So it's an important point, because many of the clients, when you audit, you can see there withholding tax from Saudi Arabia or from other countries. That does not mean that it's taxed. Why their withholding tax was applied was because they're a non-resident company. So please ensure this is not falling under the meaning of subject to tax.
Okay, so the first question that I want to take up is like, is the resubmission required? So yes, you have to not just do the resubmission, you have to reassess and then do the notification. So now you have a task. Whatever we have done, it's just like not done. Only thing is that those documents will be with us, which we can review and do a reassessment and re-notification. The second question that I see is if my first financial year is 1st of June 2018 and it ends on 31st December 2019, is the ESR is applicable or not. So basically, the financial year starts before January 1st January 2019. So it has been given with some examples from the authority, Ministry of Finance, that your financial year has to start on or after 1st of January. If it starts before that, ESR is not applicable for that particular financial year, which has started before. So for that cases, then first assessment period will come to January 1st, 2020 to 31st December 2020. The second question is, if the dividend of a subsidiaries are taxed, still do we need to report under holding company? Here, the holding company business holding company activity does not emphasize on the dividend income that it has received tax or not. Here we have to see into two things: whether it's a company which is only for the purpose of holding shares in subsidiary and it earns dividend. If yes, ESR has to be complied, whether tax or not taxed. As Mr. Jackie was just explaining, withholding tax does not mean that you have been taxed. Moving on to next question. Offshore companies are applicable for ESR? The answer is yes. Offshore company, any licenses which is issued by UAE government or UAE department is applicable. Okay. I think most of them are, we already answered, like notification timeline and okay, most of the questions are like notification, redoing the notification. Yes, you have to do the re-notification. There is no option. Reassess and notify. You can still post your questions. We'll take it up. You have the option to post the question. Please request to post.
So we can take even 5 minutes to answer the questions. If there is any more questions, we can answer it now.
Okay, one of the question is like, if we do a re-notification now, will it attract penalty? The answer is, if you have done the previous notification in due date by June 30th, which was the due date given by the relevant authorities, and then now you're doing the re-notification, the penalty will not be applicable. But if you fail to do a notification on the due date of 30th of June, and now you're doing it under the new portal, the fines can apply. Okay, I think please share your questions. We are here for next 5 more minutes to answer.
Harish, I think it's good that we will talk I will talk a little bit about, maybe because the BDs of HLB Hamt would be little cautious to know what is the pricing which HLB would like to announce on ESR, reporting. We have not concluded because the formats of the reporting is set to announce, but only we have indicative headings of reporting contents based on the experience which we have discussed through our member firms in other jurisdiction on ESR activity and our local experience on working earlier notification. We know that we have a mix of clients, like of smaller clients, large size clients. So there is no, if you say a standard pricing model will not work. So we have to see the case to case. When I say case to case, we can classify, we broadly discussed that we classify the clients into two. One is SME plus SME or SME plus clients, and then smaller kind of clients like offshore company. They do very simple operations. They do monthly one transactions or annually couple of transactions. That's it. We cannot charge a big amount. So if you ask a pricing model for the reporting purpose, we recommend that a pricing range starting with say 3,000 till 8,000 AED would be applicable for the reporting. See why we mentioned the range of 3, meaning it should be applicable for a very small company, and if it's a pretty large corporate, the reporting we should charge minimum 8,000 dirhams, because the reason being, I'll tell you why. What are we going to do? For the deliverables would be documenting everything, like whatever the reporting points which we discussed, has to be documented, because as per the law, the FTA, the National Assessing Authority, has a power to visit the client or to ask for the information for the coming 6 months, 6 years, I mean 6 years after the financial year end. So we have to keep the mandatorily all the documents and supporting documents as an evidence to substantiate the ESR reporting for the upcoming 6 years in the company premises. So we have to ensure that the client is compliant with the documentation maintenance. So we will be helping the client in doing it in a proper form as per the guideline issued by the authority. That is what we are going to do. So basically, this would be our HLB's responsibility if the client engaged HLB Hamt. So we have to ensure that the client is ready with, even an example is financial statements. What if the client does not have a financial statement? So we have to help the client in preparing it and ensure that this has been properly stored for the verification of the assessing authorities. So by looking all these, the scope is going to be a little wider for cases where there are no proper records, no proper accounting, because if the client is not ready, we have to help them in doing it. So those charges would be separately counted. What I mean, 8,000, 3,000 range is a typical reporting with like the standard company who maintain proper set of documents, and we have all the sufficient information from the client to report it. Price would change again, but I'm just giving an indicative fee structure for in case any of your clients are asking.
Okay, the one question that has been raised is like, for reassessment, re-notification, are we going to charge to the client?
Re-notification, that is not practically possible. We will not charge for the re-notification because we already charged. And if you tell the client that, because we have to charge for the reporting, you cannot double charge for the notification, because we know it's not the fault of HLB, it's not the fault of the client. The government has revised it, so we have to support the client in reassessing and re-notifying. We will not charge for the re-notification. We cannot charge.
So the next question is sole proprietorship. How we can identify the separate jurisdiction, juridical person?
Sole proprietorship, if you see the UAE, this is what we have been getting from the authorities or the other sessions which we attended from ICAI platforms and all. In UAE, you have seen single owner company in free zones, mostly FZD falls under the proprietorship category. And in the mainland, there is a single owned company. Single owned meaning either a professional company which is owned by a single expatriate, or a commercial company which is owned by a local national. Both are proprietorship concerns. So if you have a license, separate from the owner, and if you conduct a business in the label of the company, then of course it does not fall under the exempted category. It will be falling under the ESR. That is what we understand. And this is what the experts' opinion from other competitors' company and from the other platforms which we are in touch. So we feel that proprietorship, meaning that the law would try to explain that if you conduct a business in your own personal name, some people would be doing it, like locals who conduct, say, for example, I can say I don't have a license for conducting a sublease activity, renting of my property in a personal capacity. Should I do it or not? That case, no. Because you are not supposed to do a commercial activity without license. But what if I do it? If you do it without a license, then it would be counted as a proprietary concern, and then you are not supposed to register for the ESR. But what if I do it through my company? Yes, then you have to. That is what our understanding on the proprietorship.
Okay. So the next question is the portal for re-notification is not yet open. And of course, now it will be on Ministry of Finance, and there should be proper proof of submission, because there was certain portal where we submitted and we were not getting the proof. We hope that when the Ministry of Finance comes out with a portal, for sure there will be a proof that you have submitted the notification. So I request further questions because we tried to put all the amendments, major amendments, and the things to be discussed in 1 hour, being like last day of the week. Everyone no one wants to sit for 2 hours seminar. I was surprised to see that everyone, like 80 to 90% of the people, opted for 4 to 5. We have maybe a final kind of a, what can I say? It can be a kind of a thing where you can think over on the weekend. Maybe read something on this and come out on Monday with more questions, or maybe more enlightenment on the ESR topic. So as a tax department, we will be always ready to take your question. Even if there are certain questions which you want to do something research, or then you ask, we are happy. We'll be happy to take the questions, and we will be ready to help our clients as well as our other departments. So one more question has come regarding the penalty. I don't know who has given this. We have given randomly 20 to 50K in June as our reporting fee. Now we are saying, okay, can it be confirmed? See, there are competition that has increased. At that time, the competition was very less. Now the competition has increased, so we have to see our price in a competitive way. So that's why we are reducing the fee. Last question, maybe, will this document will be shared? Yeah, of course, this document will be shared to all the attendees, not just attendees, all the email address under staff at HLB Hamt.
So hope Harish, we clarify the questions. Till now.
Yeah, no, all the questions have been clarified.
Thank you so much for attending this session. Of course, this is only a starting. We will continue the sessions, once we get more clarity, and we'll give you more information once we have it. We look for your support, and thank you so much again. Have a nice weekend.
Yeah, thank you very much. So with this, I'll end this webinar, and thank you for your participation. As Mr. Zayed said, we'll be holding more sessions on ESR because there will be a lot of complication that we are foreseeing to come in the actual practical implementation. Even for auditing or accounting client, we'll have these questions coming out. We'll be happy to assist. And thank you very much for your time and your effort to attend this webinar. Thank you very much.
Thank you.
Thank you.